Ladies and gentlemen, the stock market yesterday has a terrible bloodbath, one of the worst I've ever seen for a long time. And certainly we need to analyze it to understand what has happened and what are the possibility moving forward. I'll give you various scenarios, and in each scenario, I'll give you a percentage range that could fall until, so you could understand what are the possibilities and also know what can the market also go up. I'll also analyze that for you. More importantly, is to also give you a flavor that a shot has been fired, and let's go. So today I will cover the following topics. There was a market meltdown yesterday, and I need to explain to you what had happened. And Federal Reserve Chairman Jerome Powell has actually responded to the meltdown, and he gave some prediction moving forward. Some analyst response and prediction is important for me to cover it, especially my favorite one. Prime Minister Lawrence Wong also gave a response as well, and we need to analyze it. So most importantly, today I'll cover how bad can the stock market fall to, okay? And there's a range under certain scenarios, and you need to take certain beliefs for those to happen. So what do we do, right? And of course, there's a one round away, right? Shots has been fired. So remember, hit subscribe. Most importantly, after you hit subscribe, make sure you also hit the bell, notification bell, so that you get alerted. Those live are very important because they are real-time response to what happened in the market. Yesterday, the bloodbath already happened massively in the futures market, and I'll try as much as I can to catch all these timely live videos so that you can react accordingly. So let's watch on, shall we? As usual, this content is for education and entertainment and not financial advice. And let's go. So S&P 500 yesterday went down by a massive 6%. Okay, if it hits 7%, the stock market will be closed for 15 minutes or so. There'll be a circuit breaker being hit, and that's a very, very serious thing to hit circuit breaker. And the Nasdaq hit 6% fall as well, and certainly, this is something that is not seen for a long, long time. And if I were to recall, I think the discount numbers, I only see it in COVID time and maybe in the history 3 other times. Interestingly, the TLT bond has actually went up. The cushion's on the fall. At the peak, it went up even by $94, and then it gradually go down as well, signaling that the whole market is also very uncertain what could happen. Well, when all this fall are happening, Donald Trump was playing golf, right? And of course, people are not happy that he caused all this chaos, and he's playing golf. So is he cognizant to the fact that many retirees have their retirement fund into the stock market, and all those funds are performing badly? Okay, so those people who voted for Trump, actually, you know these things are coming. You know he's unpredictable, and yet you voted for him. Right. So those people who voted for Trump, you believe that he will bring the inflation down. I'm not too sure that will happen. Second is that he will bring the war to an end. I'm not too sure that will happen soon. And of course, you voted for him to give you a wonderful economy. This is what it is, right? So make America great again is really panning out in a very unusual way. So yesterday, what happened was that China imposed a 34% reciprocal tariff on what Donald Trump slapped on China. So a trade war has happened in the sense that Trump hit China, China has hit back. And of course, Donald Trump think that, China panic, that's a wrong response and things like that, right? So Donald Trump actually scolded China after Beijing responded to a major US tariff with equal duties of its own on US goods. So he said that China played wrong, they panicked. The one thing you cannot afford to do, Trump posted on Truth Social. And and this is something that we'll see pan out now with other countries as well. So Jerome Powell yesterday gave a speech, and in the speech, he actually said that Donald Trump's tariff will likely mean higher inflation and slower growth. And this is very important. So this is a risk of a stagflation. And once he says that, the bonds also went down because everyone is expecting there to be a slower growth because of the tariff. And to some extent, right now, when they realize that this could also mean higher inflation, that's something that they don't want to see. So I think this is something quite serious. Now, President Donald Trump, on the other hand, actually said that Jerome Powell should cut interest rate now and stop playing politics. Actually, I don't know what politics is he playing, right? This is commonsensical, right? Because you don't know if there's going to be inflation. If there's inflation, you cut interest rate, you will feel the inflation. So economically, from a policy point of view, Federal Reserve is doing the right thing, and Donald Trump is out his mind to think that we should cut interest rate right now. Now, for European Union, we are all watching whether they retaliate. They already say they are ready to retaliate comprehensively, and they are the only country or only country blocks that is on par with US, and they can hit US really hard. And on the table right now, retaliation is the only real option against the US tariff. So the most likely place that they will hit is on the tech giants. The tech giants need to sell into EU, and if the EU hit the tech giants, be it Google, Facebook, Apple, Microsoft, and all this, then we're gonna be in trouble to see where the stock market will go. So EU is now possibly reacting, and if they react accordingly, where we think this is the most likely option to go, then we ain't see the bottom of the market yet. One of my famous analysts, Professor Jeremy Siegel from Wharton School of Business, actually said this. He says that Trump's tariff is the biggest policy mistake in 95 years. So 95 years ago, President Hoover actually made the same mistake with the Hawley-Smooth Act, right? So we all talk about that many times. I was one of the first person to pull out the Hawley-Moves Act in the analyst space, I think almost even globally, man. Yeah. So after I said it, that many other people actually brought out the same case study as well. And we're now no longer looking at the precedent as 2018-19, where China and US have a trade war. That's too small, too kacang putih, right? Too small a trade war. This time around looks more like the 1931. I really highlight to everybody very much earlier that we should now look at towards that one. And this mistake has been made before 95 years ago. Now they are making it again. So Jeremy Siegel said that, what happened 95 years ago? The Smooth-Hawley Act, a protectionistic trade measure that economists blame for worsening the Great Depression. I don't know why Trump didn't learn the lesson of Smooth-Hawley tariff, Siegel said to CNBC. Trump's tariff may even be worse than the Smooth-Hawley Act because the trade is much more critical right now to the global economy than it was a century ago. So the situation can get really, really, really bad. So many analysts right now are now saying that, that this is a very bad situation. I already mentioned this, that analysts said that it's worse than the worst case scenario, right? More chalat than chalat. So JP Morgan also said that the probability of now a global recession is 60%, and there will be blood. So Jeremy Siegel interestingly said that he's staying on the market because he's a long-term investor. But if you are a trader and a speculator, there are storms ahead. So that's going to be bad. Now, he did say something which is quite minor, but many people missed it. Now, while President Trump may not know history and may not know economics, so he doesn't know the Smooth-Hawley lesson, but the Federal Reserve surely has. So he thinks that there is a lowering of interest rate that is coming. And if there's a lowering of interest rate, then there could be an uplift to the market. Prime Minister Lawrence Wong came out with a statement and basically said that Singapore must brace itself for more shock following US tariff. And the global calm and stability we once knew will not return anytime soon, said Prime Minister Lawrence Wong. So he has warned people to brace for more shocks ahead. Singapore stands on a strong foundation. That's because we got a shitload of reserves and all the business connection. But, we are now entering a world that is a lot more dangerous and unpredictable. And I've actually read a lot of people who are, of course, not pro the ruling party actually came out and said that this is just PM Wong just frightening people and things like that. You got to get your mind checked out, man. This is a mammoth economic calamity if this plays out. And it led to the Great Depression in 1930s, in a massive downturn. And many people across the world lost jobs, businesses were closed and things like that. And even was one of the reasons that led to the Second World War. So if you think that this is a very small issue, you better go back to A levels and study economics, right? And that's something very serious. So let's do some scenario planning, shall we? So that we can get ahead of the game. So let's now analyze what could possibly happen. Now, this is me analyzing it. I also pump it through a few artificial intelligence machines, okay? And more or less, this is a conglomeration of all the analysts' analysis that came out, plus my own judgment call as well. So this one, don't think it's gospel truth, but this is something that we are all making a wild guess looking forward. But let's see, shall we? So the backdrop of it is now China has fully retaliated against US. And now we're talking about a 34% tariff on all US imports, blacklisted some US firms. And the S&P 500 has dropped by about 6%. It could waver between 5 to 8%, but we're all looking at a very fierce drop right now. And clearly, many sectors have now hit. And the sentiment of it is really bad because we're now fearful that the trade war could escalate. So this is already happened, right? Already happened. So this one, no need to analyze too much. But what could happen next? So the next thing that could happen is EU retaliates against Donald Trump's tariff. Do you expect EU to sit there and do nothing? Of course, they're trying to negotiate right now. Where got so easy, right? Where got so easy? EU is made up of many countries, and EU President Ursula does not have the power to direct all the countries to something to change all the rules and things like that. I think it's very difficult. So the only choice is to retaliate. That she has the power to do so. But when she retaliate, do you think the market will say, "Oh, it's okay"? The market will have a fall. Now, granted, this fall might be lesser because the shock is first from China. So let's guess, right? 3 to 5% fall. Very possible. Do you all agree? So China fall was about 6%. Okay. So EU, when they retaliate, 3 to 5% fall. I think it's very possible. And then, of course, volatility will be very, very fierce. And what's the likelihood of that happening? I think it's damn high. Now, after China and EU fire their retaliation, do you think US will do nothing? Now, US already warned that they will counter the retaliation. So they warn all these countries don't retaliate. But you think this country will listen to them? Yeah, got to get their mind checked, man, these American bureaucrats. Of course, EU and China will retaliate, and now US is forced to retaliate. So they have to retaliate on the retaliation. And this time around, the retaliation have to be fierce and go for the jugular, right? So once you go for a death blow, the stock market will fall at least 5 to 10%, right? At least 5 to 10%. I think it's possible, right? So is this highly likely? Of course, super highly likely. So, these are all the scenarios that could happen. But this is not the worst. What if the rest of the world, the major trading blocks also join in? Canada join, Korea join, Japan join in. I don't know who else can join in, Singapore too small, too kacang putih, right? But the rest will all join in. And each country, when they join in, maybe, it increase the pessimism by 1 to 2%, and then it just go down. And, more or less, major trading blocks now group together, isolate US, and that will be a very, very bad outcome. Very, very bad outcome. Now, could it be all gloom and death? No, there could be some saving grace scenario. Donald Trump wakes up and sees fire, okay? And he quickly seal a deal with everybody in these few days, maybe in 1 or 2 weeks, whatever. He quickly get all these deals done. Then the S&P fund and all the index will all go up, in a massive way, massive way. What's the likelihood of that happening? I don't know, man. I think it's low. I don't think it's zero, but it's certainly low. I think in the short term, I think the chance of this happening is low. Remember, not zero, but it's high in the long term because that's exactly what he's directing towards. He really say I'm working towards that, right? So if this saving grace scenario don't happen, I think recession will be in the horizon. Okay, then good luck to the whole world. So key implications from all this analysis. Number one, those people that were impatient, that dive in and say, Mr. Lu, you stupid ass, you should have bought, when the market had dipped by 6%, 7%, I think you really realize what I've been saying, right? I said that the stock market is a place where wealth is transferred from the impatient to the patient. Now, I'm watching for three signals. These three signals are important. Number one is if we could catch a situation where the the possibility of it getting worse is no longer there. That means it's bad but can't get any worse, right? That's a good sign, for me to watch out and possibly to fire. And second is there are ceasefire, deals that are cut in trade war. That's great. Vietnam, I think, is really calling out for ceasefire with US and of course, Donald Trump is quite happy that Vietnam has actually bowed their knee and bent down and kowtowed to him. Or when Federal Reserve in a big massive way. Okay, so I'm watching out from these three signal, and when I see this signal, I certainly will talk about it live on my live stream, especially because some of this happened immediately. So please, remember to click subscribe and turn on the notification if you want to catch this live. And this is where I want to also announce that I haven't fired yet, but my son has announced to me he has fired his first round. I won't talk about how much is it or whatever. He's free to do what it is. He managed a sum of money from the family fund. So I give him a full autonomy. When he informed me he's fired first round, mm, I would say that, I say, okay, yeah, good that you fired first round, okay, but I'm not firing. So I'm not telling you to fire as well, but just keeping informed that one member of the family has actually fired. Okay. So anyway, just food for thought and entertainment. So moving forward, things are happening real time, unbelievably, unexpectedly, and in a massive way at certain times. So let's watch on, follow us very closely, and we shall see whether this thing pans out, exactly in the scenarios that we say. So I'll see you in a day or two. Bye bye.